Good thing that didn't happen now before we're like really in the interview.
That's true.
Um, Mark,
Yo,
you hear us?
yes, I can. Can you guys hear me?
Cool. Yeah, we can. Yeah, thanks for being here with us.
Thank you.
Just gonna get right. All right. All right. So we're live. First of all, I'd like to welcome everyone on to another episode of the Pepper Soup Talk Show, where we bring to the table movers and shakers in the African diaspora. So our special guest today is someone who is changing thousands of lives. Someone who's done a lot in his career, from working at startups, starting his own startup, to selling it, working in the VC world, or running his own venture capital firm, to where we got tuned in to him today, which is through the Come Up series.
Mm-hmm.
And so this is actually a very special episode for us because the three of us here are all what you call Come Up cousins. And so the Come Up series,
OG cousins.
Nice. Nice.
So Come Up series is a platform that teaches people, especially Black and brown people, to trade long-term options, and has a mission to eliminate the racial wealth gap in one generation. And so we're very excited to talk with Mark about his journey, and to how he came to do what he's doing today, with the Come Up series, and to provide value to our audience, and introduce them to some of his strategies that have been so transformational to many people. Mm-hmm. And so, if you've heard Mark, like hope we have some cousins on the live today, and hope we can birth some cousins from this live today too. But if you've heard Mark speak on the Come Up series on YouTube or on Clubhouse or on Twitter Spaces, you know that he's a man of who has a wealth of knowledge, but is also wise beyond his years. And so that's all to say that we're very excited for this convo. And with that, welcome to Pepper Soup Talk, Mark Monroe.
Thank you for having me, guys.
Yeah, so Mark, just jumping right into things. Can you tell people a little bit about yourself, like your background, and where you're from?
Yeah. So I hail from originally Jamaica. I moved here to the United States, and there's a lot of echo.
Hold up. All right, we good now?
I think yeah. We'll deal. We can do this. So pretty much, my journey started after foster care. My grandparents became my legal guardians, and my journey first started with business and investing at the age of 9 years old. My grandfather used to have investment club meetings every Saturday. I just knew that that's when my grandfather had the dopest donuts that he would buy for the weekend. And, you had to get there early to have the good ones because he always bought the good ones, but then people would take them early on. So I would sneak downstairs and ultimately do that. And then one day, I think one night before, I stayed up too late, and then I ended up falling asleep in the next room. And then I accidentally put a hole in the wall by like tipping over the ironing board. Pretty much that was my entry inside the door. After a whooping, of course. So then pretty much fast forwarding from my childhood going into college, and I had the privilege, I guess, to not like overstep it. I started working at Microsoft my junior year in high school. I started off as an intern and then started working 3/4 time while in college, all the way up to my junior year in college. And I was like, all right, my grandparents dropped me off at college and was like, all right, you're smart, you'll figure it out. So there was like $1,000 that was given to me, and then that was it. I had to figure it out from there. And life picked up pretty quickly for me, going through the student loan process my freshman year, and then realizing that this is not where I want to be. pretty much going into, I've always invested because my grandfather taught me how to invest. But I was like, I started looking at other vehicles because it was all about survival and getting to a place where I wouldn't have to really be looking for money or having to build up insurmountable amounts of debt. So I looked at this thing called options trading. And the funny thing that a lot of folks don't know about me that I'll kind of share with everybody is it was going to be either between options or futures that I was going to be trading. And I chose I chose options first. I looked at futures, I understood it, but I just didn't have the time for futures. I did not have the time as a freshman in college. I did not have the time for trading futures at all. And on top of that, I didn't have that much amount of capital for it. So I started trading options. My first options trade that I did, I took my refund check in college, literally traded $1,500, turned that into 45. And for any college freshman that just did something right, you're like, oh, shoot, I'm in. Yo, exactly what you did. The rubbing of the hands, we're here. And then as soon as I got cocky, I went to class. 2 days later, I'm like, yo, it'll just keep running. 2 days later, I saw the account and $15 was all the value of the portfolio. Man. And that in that moment, I had to decide okay, hey, is this something that I really, really want to do? Or is it something that I'm going to just say hey, this is not my speed. I need to move on to something different. And I just realized I was like, I'm good at this. I can do this. And so then I took on the challenge and said, okay, hey, the next money that I get, I'm going to definitely study up a little bit more, be a little bit less cocky, and ultimately get better at it. So I started off as pretty much like a weekly day trader in options. And the money was just different. And so for anybody that needs a little bit of clarification that doesn't even know what that is, in investing, you have stock in which that you take on, a ownership stake in a company. So you own one share of the company. You own it. When you do options, you have the option to buy or sell to someone else or to buy it for yourself. So which means that you're trading an option. Now that's built upon an expiration, in which that ultimately, I guess we'll probably get into later, but ultimately it picks up value as it gets closer towards a price target in which that you set. It loses value as it goes away from it. With a few other caveats there, but ultimately it's just different in that arena as it pertains to what you can make. So for me, I was like, all right, cool. Did that through my college year. My junior year, paid off my student loan debt. I was actually getting good enough where I was actually able to, my sophomore year tuition was paid for with options trading, paid off my student loan debt my junior year. And on top of that, paid off the student loan debt. And then essentially, and so on and so on. Fast forward a few years, options trading has kept me afloat as I was doing other things in my career, even having a brief stint in the fashion industry. And then from there, literally starting a company that was focused on recruiting and, recruiting in tech. And that company later got acquired. But it was the options trading that kept that startup afloat. Gotcha. So I was making about maybe $50,000 a year at my job. And then I was running a startup, but at the same token, I was trading options at the same time. And pretty much, to pay for software developers, your data costs, your marketing costs for advertisement, that was all paid for through options. When that company got acquired, I said, okay, hey, well, what's next? I got this capital. I need to return back to, I know one thing that I'm very good at, and it's options trading that got me through freshman year in college. It got me through the brief part of my short-term adulthood life so far. And then now it's like, okay, hey, going through venture capital, I didn't have to go through the process, thank God, of having to deal with, doing significant fundraisers because my fundraise was right there in the market. And so I was able to invest in quite a few startups in the process, and especially startups that look like us within the tech space. And now it's I realize that, hey, I'm doing good, but at the same token, I look around and everybody else ain't doing good. Mm-hmm. So for me, that's really where the Come Up series really started to was in its very infancy stages. where, meeting people like Jolene and mentoring her in the process and teaching other folks, to now it's like over 50,000 people, where, the knowledge is there for everybody to teach them how to research, teach them how to learn the markets, teach them how to understand it, and then also make, decisions accordingly. So that's where we stand today, though that I'm 10 days away from sunsetting my career as a venture capitalist.
Wow. Wow. Yeah. So in transition, and I think it's so powerful, like when you talk about, partly funding your startup through trading options, and then even, paying part of it through school, and like some other endeavors too, because, you've talked about how, the Come Up series and even options trading as a vehicle for building wealth, but how it goes beyond just money, material things. Like you've spoken about how, it's a vehicle to also be able to create and do the things that you really desire to do. And so I think that's powerful.
Yeah, just and I want to go back to, like we already say we have options with options, because personally, like I even, back to what you said, Mark, about, this, I think my first trade was like a McDonald's trade. My first to second trade. And I think I texted our kid and I made like $2,000. And I was so excited. And it makes me think back, like it was probably the worst thing to happen because I made so much money so fast. And it brings you back to, you get excited because the options money is so different, but the psychology behind it is so much more important.
Yes.
And that allowed me to think you have to look at it differently, separate the money from the actual math of it, which allows me to want to roll into like the 70-30 and the rolling fours. And that's something that, Mark, you derived yourself along with the Come Up series. And I just think it's amazing because literally I started out with it was like 40-60 and I was excited. None of my friends were even close to that. And then I stumbled upon the Come Up series and you're like 70. I'm like, what?
You mean more?
You mean more? Go ahead.
So for those who don't know, Mark, can you explain what the 70-30s are and what the rolling fours are, and
Sure.
And Come Up series, and how that came about?
Yeah, so actually the rolling fours and 70-30 actually started off when I was actually in college. That's what literally kept me disciplined and everything else. Meanwhile, everybody else that I went to college with, and I'm learning now that I have a lot of college friends that I went to college with are pissed off at me because they're like, bro, why didn't you teach me this? And I'm like, yo, you guys were out going to the club and everything else, and I wasn't doing that. But yeah, so the 70-30 is that 100% of what you make, you invest 70, you save back 70% of what you make and invest it, whether it's buying stock or essentially, trading or a mixture of both for diversification. And the 30% is what you use for your expenses. Now, of course, wherever you start, that's where you start. But ultimately, it builds up a discipline. So that way, when you do build that wealth, it's like you learn to live with one less. And then two, it's like you can do more with essentially the money that would ultimately become excess. And the way that I discovered that was I just looked around, where I currently lived, and I saw a lot of the things in which that I would acquire. And I'm like, yo, does this make me money? Like, does this actually make me money? Does it build forth anything towards my wealth journey? Food does that because it keeps me alive for my wealth journey. If I have a means of transportation, and that helps me get to places in which that may help me in my wealth journey if I'm working somewhere. The books that I study, the books that I used to read to study, then yeah, that helps me in my wealth journey because I'm building a wealth of knowledge. So those are the types of things. But then when I start looking at, like, for example, the shoes that I may buy, I'm putting more money in Nike's pockets than I am in, the bank of Mark Monroe Inc. So, looking at that and saying, okay, hey, that doesn't build forth any wealth. It's temporary satisfaction. What can I do to get better at that? And then the rolling fours, when you're applying that 70-30 goal, or even if you're starting off at 40-60, like you had said, or 50-50, because a lot of folks are at 90-10 or 95-5 or 100-0. So when you do that, now that you have this capital that's sitting there, you invest. So whether it's, like I said, you buy stock, and the rolling fours is set where it's like, it doesn't take a lot of pressure on you. It's just that once every quarter, you deploy capital that you've saved into the market. And essentially the rolling force for me as an options trader, though I had stock, but it was like, okay, as an options trader, I started to execute probably my senior year. I did my first set of leaps in the market. So I started doing long-term leaps, which is pretty much a year to 2 years out positions in options. And I would deploy capital every quarter. And so then therein, it's like I'm only doing 4 trades a year without having to worry about all the necessary like other stuff, without having to like, oh, I got to go do this trade, or I got to do that trade. That was the biggest part for me also, from going from day trader / weekly trader to going to long-term trader with the occasional swing here and there, because you can't take the day trader out of me. It's still there. But at the same token, it gave me the discipline, and then it really prepared me, especially when I was in startup world, that I could start running things on a quarter, and I started being able to deploy capital on a quarterly basis into my startup to keep it afloat, while just using the rolling fours, while that startup was helping me build up even further wealth. So essentially the rolling fours is that every quarter you deploy it towards a long-term position, whether stock or ultimately a long-term leap trade. And then from there, it's like you do it again. And then pretty much over a period of time of whether it's, 3 years of doing that consistently, then essentially you should have amassed a significant portion of wealth over the process, in which that prepares you for whatever the next stage journey is. If it's, just doing this on a long term and just living off of what you make, or doing the things that you ultimately want to do versus doing the things that you believe that you have to do every day.
I think something that helps people be able to make that mental switch to be able to go into the long term, to the leaps, is being able to better understand the effect of compounding. Because at first, when you think about it, or when you first explain it to someone, or when we're first learning it, it's like, oh, you have to, how can, let's say like $2,000 or $5,000 or however much you're putting in, how can that translate to, what that amount ends up being after 3 or 4 years? But like when you do the numbers, it really is that. And so like understanding like compounding. But Mark, for you, like how did you make the mental shift to go from day trading weekly to the long term? I think
that's a good question. Like a lot of folks don't ask me that question. How did I make that mental that mental like switch? It actually came very simple for me. Time. Really, it's like, one of the things that ultimately is undefeated is time. And so, for me, it was just that being in college, your freshman year kind of like starts off like, okay, I'm getting into the swing of things. But then come that sophomore year, something like that switch starts to go off, where things start getting a little bit more tougher. And you start realizing like the amount of time that you have starts to become even more precious. And so for me, it's like, being a day trader, there was moments in which that, hey, I'd be looking at trades throughout the night, though that at the same token, I got to study for something, or I got to read up on something. And then at the same token, it's like, hey, I got to execute this trade. And sometimes I may not even be able to execute the trade in time because of the fact that I'm sitting there in a lecture, which ultimately, the professor may say no cell phones, and then I'm screwed, or whatever it may be. So then it was just like, the time like started to dictate that for me. And as I started to become even more involved into other things, it started to let me know that, okay, hey, I can't control time, but I can ultimately manage it. And if I manage it well, then I can literally play within the realm of using time to my benefit versus me feeling like I'm always behind on time. And it allowed me to feel like it allows me to buy time. So that was the biggest thing. I needed to buy time. And I think it came when I was literally trying to execute one trade. And I was trying to execute, and something happened where pretty much I think I couldn't execute it. And pretty much I wanted to sell, and I just didn't have the time to get to log into my portfolio and then execute the trade. And I remember being so heartbroken. I think I actually cried that day, like, because it was a significant trade. And I missed out. And then ultimately the position expired. So then I was just like, okay, hey, like sometimes your brokerage, they just won't cash you out just to be friendly to you. They'll be like, okay, well, since you're not going to do anything, boom,
Yeah.
we'll just let it expire. And
Yeah.
so I literally had a position that expired while I was significantly profitable.
Wow.
And it just didn't allow me to, time didn't allow me to do that, because at the same token, I had a stats, I think it was a stats or a marketing class. And so I started realizing I need more time. So I went from doing daily, weekly options trades to now doing, I started off, I think, with 6-month trades, because I was already doing, like, within my swings, I was doing 3 months. So then I went to 6-month trades. And then I just said, you know what, to heck with it. I'm just going to a year. I'm just going to play it for a year. And then the year became 2 years. And then at that point, it was just like, all right, I never really wanted to look back. And now, of course, like I said, the daily, weekly trader is somewhat in me. It'll never leave me. So I'll do the occasional swing trade here and there, but for the most part, I stick to the rivers and the lakes that I become comfortable with, and that's long term.
Definitely. So, well, I was gonna say this, for everyone who's tuned in so far, if you have any questions, definitely feel free to put them in the chat while we're talking with Mark. And if you like what you are seeing and hearing, definitely press the like button underneath the video, and share this with your friends. Let them know that we're on this live.
Oh yeah, just a follow up to that. So moving into long-term options play, how long did it get you? What were the tools or the pros and cons or failures or success that helped you come up with the strike price formula?
So the thing that helped me come up with the strike price formula was, like, literally, I would start looking at, it's actually funny, I started looking at analyst price targets. I started looking at analyst price targets from, what their research would say. And then I was like, there's got to be somewhat of a simpler formula for me to, because how did they come forth with these pricings? And then I started realizing, your average stock typically grows about, maybe 15 to 30% year over year. And so if you get good at it, then you can literally start putting it in some type of formula where you can start noticing that there is a year over year growth for, each and every single stock, or even some of the ETFs in the market. It's not a 100% science, of course, but it's something in which that I started using to say, okay, hey, if I was to set a 15% trajectory marker, and how is it that I price in any of the potential downside risks, then that's ultimately how I came forth with the strike price formula and literally setting forth my strikes. I typically play on the conservative to mid-conservative side when it comes to picking out my strikes, but literally the secret sauce to it is literally just taking into consideration the year over year growth that's on average that you expect from a stock to grow. And then essentially, if you apply it to a 2-year, then essentially you just take the 2 years worth of growth over a year over year. And then if it's just a 1-year options play, then you're just taking the year over year growth.
Gotcha.
We speak on in the beginning when you're doing these long-term option plays, leverage. Like, can you speak on leverage, and how you actually gather leverage for a lot of someone that's brand new, or even cousins that have been in the mix for a while, but have to just stay on acquiring leverage first?
So here's how I typically play leverage. Leverage probably represents maybe 15, 20% of my portfolio. So the rest of my portfolio is essentially liquidity, which is, essentially safe, very conservative plays that go out for the long term. Leverage is something in which that I'm leveraging against my long-term safe plays. And then ultimately I want to take on a little bit more risk. I have a stronger risk appetite at the moment. So I'm going to play a leverage play, which would probably be a 6-month to a year play. And then essentially it's like, I'm going to probably remove some of the factors of, let's say, the 15%, and I'm going to probably go with a 20 or 25%. So which means that I'm flashing a very, very bullish sentiment towards a specific stock or a particular sector. And so essentially, if I'm very bullish, then that means that I'm going to take on a lot more risk because of the fact that I'm removing any of the bearish sentiment from my leverage play. So if I'm playing, I'll give an example. Let's say that, for example, if I have a liquidity play, which is safer, more conservative, I'm going to say, everybody knows what the vibe is between me and Tesla. I'll say that my conservative play would probably be for, if I'm just for example, I'm playing a 900 strike for 2023. So a 900 price target for Tesla by 2023, January or March. And then my leverage play would be, I'm really bullish here. So I would probably play, say, for example, I would play that same 900 strike, but then I would bring it down by a year. So now I brought a little bit more risk to my table. So my risk appetite is good. But the cool thing about it is if I lose, and mind you, it's only 15 to 20% of my portfolio. So I'm not losing a significant portion of my portfolio. And anything that I lose in a leverage play, I should be able to gain back in my liquidity play, which means that ultimately it's kind of like a no harm, no foul.
Mm-hmm.
But if I gain in that leverage play, I can take the gains from that leverage play and roll it up to it actually becomes another long-term liquidity play for myself. So when you're leveraging, when you're playing leverage, it's just like anything else. When you leverage something, you're leveraging against something. And so for me, when I'm playing a leverage, options play, I'm leveraging it against something that I already know that I have that's already in the oven that I know that it's cooking.
Yeah. Yep. So liquidity first. Always liquidity. Okay. with the rolling force.
Always liquidity first. Always liquidity first.
Once a quarter around quadruple witching. Yes. Then you want to play those. You want to hedge as well.
Yes.
Smart. RSI, Bollinger Bands. So next, when do you think it's a good time to actually make that leap of faith into a leverage play versus sticking to your rolling fours and just hedging?
Well, the biggest thing is that essentially, again, it comes down to your risk appetite. If you got a risk appetite in which that, your rolling fours is pretty set, and it's like, okay, hey, I got a little bit of liquidity on the sideline, or a little bit of capital on the sideline that goes beyond my hedging, but ultimately I can use as a leverage against what is it that I already have. Because if you're a trader, you're going to find somewhere in the process the allure of wanting to play something a little bit more of risk. You're going to want some risk appetite on your table. And so when you get to that point, if you say, okay, hey, I want a little bit more risk, but not too much risk where I turn into a weekly trader, but I want some risk where it's like I can gain something a little bit more faster than what my liquidity plays will print, then that's when you play. And at that point, now you're looking at, say, for example, the factors here. You have to look at sentiment. You have to, fundamentals don't really play a strong role into playing leverage plays. When you bring on more risk, then it becomes a little bit more technical. It becomes a little bit more technical, a little bit more sentiment. So when you're playing a leverage play, you're looking at, say, for example, the momentum going into such a play. So you're playing it for the upside momentum or the downside momentum if you're, betting against. But you're going to run that leverage play and say, all right, I'm feeling a little bit more bullish here based upon what is it that I've been seeing from past previous experience and based upon what I kind of know about some seasonality and some trajectories. My rolling fours is already set. So I'm already set for the next 4 quarters to do what I need to do. Now, let me just go ahead and say, all right, well, let me go ahead and play this leverage play. So let's say if I play that, we take that same example of that Tesla 900 call. I would play that for, let's say, January 2022 versus the 2023. And the thing is, my strategy is a lot different than my liquidity play. My strategy changes now when I'm doing leverage plays. I'm like, all right, I'm looking for some beta here, AKA some price movement to the upside. So I'm looking for some growth. But at the same token, I'm always keeping my mindset and saying, all right, well, I'm playing this understanding that the risk is going to be a lot different from the long-term safer plays. And at any point in time, when I start feeling the pressure of any type of downside risk that gets a little bit too high for the way that my blood pressure is set up, then ultimately it's time for me to literally find the nearest exit and leave.
Stage left.
So sometimes you realize how much experience is the best teacher, because there are definitely a lot of people, including I know ourselves who had some leverage plays where we shouldn't have this past year, and we saw what happened with the market. Yeah, in 2020, and definitely got humbled in some ways very very quickly. But
that's okay though. Yeah. That's okay.
Right.
No, for sure, and because the three of us here, we speak basically every day, and we talk about how following like the rolling fours strategy, and like when you look at the numbers of what things are, and even like the reasoning behind, so like the signs or the process behind the idea, like if you look at deploying capital every quarter versus even like having the capital deployed in like closer bouts, like why that's so important. Because if you look at how the market dropped a lot this spring, let's say if you were to get in, let's say in March, or if you were to get in now versus let's say you deployed all your capital in December or January, how much that makes it a difference in just like your overall timeline. So but this is all to say that like experience sometimes is the best teacher, because it hits home. Because a lot of people are definitely hard headed, because you can say the same thing over and over, and punch in the face.
You don't know what you don't know.
Right. You don't. You seriously don't. Like, here's the thing that the best example that I can give to folks is you have somebody that's been in the game for 17 years. That's a fact. Yeah. But essentially, many folks have been in the game for maybe a year, but then they're expecting to literally carry that 17 years of experience into their portfolios. And that just doesn't equate. You only know what you know. And at the same token, I always look at it from one of the things that I learned in college, and I still do it today. And I may have to actually do this as an episode now, since I'm releasing it today on your channel, is there's this thing in communication that we call the Johari window. And so the Johari window is built of 4 corners, or 4 quadrants within the square, the one square. And it's built in the things in which that I know that the market knows. And then there are things that I know that probably that the market doesn't know. And then there are things that the market doesn't know, or that the market does know that I don't know. And then there's this thing that the market doesn't know and that I don't know at the same time. Many times what I do there is I look at it and say, all right, that's many times when I'm building my trade and when I'm really putting together the strategy, I'm going through that process, like to literally start to figure out, okay, hey, is this more so like something that I should really focus towards liquidity? Or is it something that I should focus towards leverage? If there's something that I know that I've been able to step out based upon just my knowledge and my way of thinking that hasn't quite hit the market yet, because sometimes you hear it amongst whispers, like, certain communities know, but it doesn't mean that the entire investment community has already priced that in yet. And so you're kind of like doing that part where it's just like, okay, hey, does the market really know that? And that's where you start to see it, where you look at analyst research to see exactly what they know. What is it that they're writing? You're also starting to see what news has already started to come into the foray. Like, one of the best examples I can always look at is when you hear the rumors about Apple. Apple doesn't comment on rumors. But one of the things that you notice is that if it starts off as a rumor and then all of a sudden Apple comments on it, then that's no longer a rumor. That's actually news. And now the market, and it's like the market knows of the rumor, but does the market know that it's actually news yet? Yeah, based upon that quiet, just based upon that silence, I'm going to have to actually go through that as an episode now. Thank you.
Yeah, that's the one you said. We watched the video.
There's a good question regarding this in the chat. Thanks to Chief Motivation. He asked, which is better for liquidity, stocks or ETFs?
Personally, if you want less risk, then you're definitely going to go ETFs. ETFs are definitely a less of a risk than stocks. Though that in this current market, we're seeing stocks and ETFs kind of trade a lot like each other. But in the grand scheme of things, when we start getting to more normalcy, you'll start seeing that ETFs trade a lot more consistently, more so like actual ETFs should do, where it's more of a consistent upside. Stocks are always going to be a little bit more of a risk because of the fact that there's singular volatility versus ETFs. It takes in all those companies and they can offset, say, for example, a company that's trading to the downside for the day. So for the best play for liquidity, depending on your risk appetite, I would definitely say if you're just starting off, I always recommend that people start off with ETFs first, especially index ETFs.
And Mark, I know you said that in college you were deciding whether to start with options trading or go with options trading or go with futures, and you made your. I see in the chat here, someone asked, "How does Mark feel about crypto trading?" I think a lot of people who might be deciding, okay, what should I venture forth with? Should I, start trading options? Should I be trading crypto? So can you talk about how you feel about crypto, and then also for the new people who may just be, learning about this for the first time, if they want to get into this whole like 70/30s, rolling fours strategy, how do you start? Do you just start with the 70/30s and then wait before you start deploying capital, or like how would you go about it?
Yeah, so I'll answer both of those. I'll start off with the crypto question first. So crypto, like for those that don't know, I actually started off as a cryptocurrency miner. I actually started mining cryptocurrency at first, and then moving and transition into just like really just trading every now and then based on moving from Bitcoin to Ethereum. At one point in time, it was Litecoin, but then that kind of ended. I haven't taken part of the whole Dogecoin crypto craze. But I kind of look at it in the same way as like it's kind of like Forex with like stock steroids a little bit, because of the volatility movements are just completely different. But at the same token, it's like, you have to look at it from a standpoint of, with stocks, there is a fundamental. There's a lot of fundamentals that are in there. With crypto, there is some fundamental basis in there, but you have to look at like exactly how the coin itself is, how it was created, why it was created, its whole mission purpose. And therein kind of like gives you the fundamental behind it. And then look towards the future and saying, okay, hey, which one of these will ultimately debank people or be a part of that process of debanking used as it pertains to, actual circulation. But if you're just looking at it from a purely technical standpoint, then, hey, God bless. I mean, whenever you're doing anything as a trader, especially within the short term or within like, scalping or swings, you could do the same thing within cryptocurrency for sure. And understanding levels in which that you could spot buyer activity. You could do the same thing in cryptocurrency. So there's nothing wrong with it. Just remember, it's like, the fundamentals start to go out the door, the shorter the time period that you start going on, versus when you're going into the more longer term, then you're on the fundamental standpoint. When it comes to doing the rolling fours and 70/30, it depends upon where you are in your journey of understanding the markets, investing, economics, all those major factors. Like if you have a solid base in understanding, then by all means, the moment that you're able to save up, like you can set a budget. Let's say if you make $100,000 a year, and then let's say, you are able to deploy about 17.5 on a quarter. So you reach the 17.5 by the quarter and you already have planned for the next quarter to do the same thing. Then at that point in time, you can do that. It makes all the sense in the world to say, okay, hey, I can execute. And all the while that you're in those plays and positions, you're already looking at the next opportunity while you're also going through the saving process. But if you are struggling to ultimately do the budgeting, then you haven't gotten to that point yet where you have a solid money plan. And probably most likely the money that you're going to be putting into the market is money that you're going to be afraid to lose or that you can't afford to lose. I always ask people the two questions. How much are you willing to invest? And then they tell me a number. And then the next question I ask them is, how much are you willing to lose? And then that number is 9 times out of 10 different. Then that's when we get to the key crux and we find out that that's the real number that you're willing to invest with versus the first number. You're saying, okay, hey, that's really you just being a little bit more risky Roger there. And we probably need to tone it back. And that's where we need to get into the financial gym and start saying, okay, hey, let's start working on the budget first. So it all varies. It all varies based upon where you are in your journey and where you are in your knowledge and understanding.
That makes sense.
You also said that you started with 70/30 back in college, and that's that's kind of early. Like a lot of people, it takes some time before really start getting down, say budgeting and just kind of like being within the lines financially.
Yeah.
That mindset, was that a mindset that you've always had? Did it come from somewhere, like, how, your upbringing, like where did you drop that mindset?
And to build on that, Mark, you said you paid your student loans off in college. Is that correct? And you still were disciplined with the 70-30. So even though you had the money and you were making more money, you still stay consistent on that 70-30, which is even, more.
So here's how I did it though. I mean, a vast portion, I think, I have to thank my ancestor while he's still here, and I'm giving him his flowers every day. Because without Louis St. Cyr, there would be no Mark Monroe standing in front of y'all, and ultimately the knowledge wouldn't be there. So I always give him flowers every time I get the chance. So Louis St. Cyr, if you ever watch this video, if you're ever scouring through the internet and see this, then hey, I love you and thank you. He taught me a valuable lesson, especially him working at Boeing. He literally had this mindset of, literally he worked at Boeing at the same time he had a reggae band, and he would make money, and the reggae band money would literally get to the point where the reggae band money was the passive income, which would cover all of his expenses. And his Boeing money would literally be fueling everything else for the future. And it was just more so in the sense that he treated every dollar as if it worked for him. He worked for somebody else, but yet his money worked harder than he did at the office. And so I kind of started to carry on that mindset where it was just like, okay, hey, the money that I brought in, I always wanted it to work hard for me. So when you want your money to work harder for you versus work harder and smarter for you, then other things in which that you're willing to give up, the discipline or the journey towards that discipline start to become so much more easier. But then that comes with that conviction that you must carry. And that was a conviction for me. It was like, I told myself that there was only going to be so much amount of time that I would ever work for a corporation. And Microsoft was the last corporation that I ever truly worked for. The only other company that I ever worked for was a company that was a small firm, a small engineering firm, in which that I helped start the firm. Outside of that, I never worked for anybody else. And so it was that mindset that I would never do that. And ultimately that the money that I would make, it would work even harder than I do. And I work hard. Like I work hard. My body of work says that I work hard. But at the same token, my money's got to work harder than that.
Right. And just to confirm, Peggy Gasper in the chat here asked for clarification: 70% stocks, 30% for expenses. And I just kind of like 70-30 is 30% to your expenses, 70% just investing in case of talking about investing into options.
So we're just going to take a step back really quick. So we talked briefly about cryptocurrency. Is there any particular reason you prefer Ethereum over Bitcoin?
I get this question every time. I feel like Bitcoin is kind of like, it's the one that everybody trades because of the fact that it's the volatility and the fact of the amount of volume that it creates as it pertains to price movement action. But I like Ethereum better because of the fact that Ethereum actually has a stronger fundamental base than a Bitcoin does. Bitcoin talks about, like, I look at it from the Jay-Z song. I tell you how it is, you tell me how it might be. And so that's why I look at Bitcoin is you tell me how it might be, and Ethereum is telling you how it really is. Their fundamental focus is making sure that essentially that they can actually get to a point of debanking, people from actual, traditional central banks, and focusing, and you can see it because of what they're doing with the technology that they built and the structure that they've added to it, which is ultimately being used across many different other systems within its blockchain technology itself, which ultimately gives even stronger power and purpose towards Ethereum. We don't see that amongst Bitcoin. Now, of course, it's like the gas fees are a little bit, cheaper within Bitcoin, but yet at the same token, it's like you pay for something, like it's like paying for quality. So I would rather pay for the quality of the coin and of the system and its structure in Ethereum versus paying for Bitcoin, in which then honestly, they still haven't given us any significant strong use cases versus Ethereum.
Word.
I'll be remiss, in the words of Mark Monroe, if I didn't speak on Tesla. I feel like Tesla has so many adversities. It's facing all the FUD in the news with a lack of a PR team. It's literally going to affect, every ICE in the world, as well as non-renewable resources companies that are geared towards that. So it makes sense why they want to, gain sentiment around negativity towards Tesla. Like, what do you honestly think that Tesla can do to really divert a lot of this negativity? Because I feel like at this point it's unstoppable. Like it's coming, but I feel like they're trying to slow it down, and basically slow down the inevitable. But right now, Tesla's still trading 30% below its highs. So what do you think it can do to turn around?
Honestly, I think that what they got to do is just like literally just release good products and ultimately make good on some of those promises in which that it said that it would do. Like, for example, Tesla semi-truck. We know that that's going to be the next bump. Autonomy and full self-driving. You got to prove that. We started hearing about a lot of the things in which that you're doing with, removing radar and stuff like that. That's cool. But yet at the same token, people don't really care about that on the masses part. They just care, does it work? And when does it become a part of the mass, to the mass consumer? The other part is, I look at it like this. Tesla is not paying for any of the press in which that it's getting in the news, whether good or bad. The thing is that even if it's getting bad news, it's still in the conversation. Versus when you look at other auto manufacturers, they have to pay to be in the conversation. That's the way that I look at it in the sense of, the press. Now, when I look at what took place in China, I think that model works, and getting bad press in the United States works best here in the United States. But when it comes to China, totally different country, totally different system, in which that I think that Tesla walked in a little cocky thinking that, oh, well, we could do the same thing. And that's not the case. And those issues can be ultimately resolved. I think that they're going through a lot of the same FUD issues that we went through in the United States, except that you're dealing with a totally different social system there. And you're already starting to see that they're doing a lot of significant hiring on the PR side. You can just check their job postings in which that they're doing that. And I always say, check a job postings of whether on LinkedIn or Monster or whatever it is, and you'll see exactly where is it that a company is, which direction that they're headed. They head in the directions to where they recruit. So I think that looking forward, I think that also a lot of folks don't understand Tesla yet because of the fact that they've only been led to by smaller narratives. Like, for example, focusing on just, hey, the cars go fast and people are willing to pay for them. One of the things that they don't realize is the software. And I think that, people are now starting to wake up and realize that. So I think that that's going to be the driver to drive it back up to the top, and not only just up to those highs, but also go ahead and make all-time new highs. I think that also a lot of folks don't pay attention to what they're doing on energy storage and how they're positioning themselves very much so well, quietly, without even heavily talking about it. The fact that you have energy companies that are now using Tesla's, actual storage quietly, though that essentially it's like Tesla is like bringing in significant and insurmountable amounts of revenue. The only thing that people look at is the consumer facing side, but they don't look at the enterprise side because enterprise is always quiet and it's not as sexy. So I would say, in looking forward with Tesla, I think the biggest thing that, a lot of folks really care about is its deliveries, which, I think that when it comes down to it, without PR, I think with PR, we would probably be seeing the stock probably trading at its all-time highs because of the fact that there's a narrative in which that you can control. But I think that when it comes down to it, when people start to actually see the results that you can't refute, and then when they have to look across the pond and see the other auto manufacturers and literally start to ask, well, where are you at in this process? That's literally where it's like the game and the conversations start to change. And sometimes they take a little bit longer than expected. But ultimately it's like, here's the funny thing about Tesla. Whenever they put on an event, the world stops. They're kind of like Apple. Like you can't really say that about many companies. And so, I think that, it's just going through the growing pains right now. Everybody loved it. It was, very much so attractive. Let me ask you this. If Tesla announces that they'll do a 3-for-1 stock split, who's buying? So, I mean, like, again, they don't have to really pay for the press. Even if it's negative press, they don't have to pay for it. So It keeps you in the conversation. The only way that we were hearing about Ford was they actually had to pay for those advertisement slots just to be relevant on SNL.
And Lucid.
And Lucid. I mean, and so it's like, again, we're now getting ready to hear about Tesla having its own app store built inside its cars. Like,
shout out, shout out to AMD.
Shout out. Big shout out. So I mean, again, it's like, we're seeing things happening, and that's why I mentioned like the Johari window part of what does the market know versus what is it that you know. And like I said, there's a lot of things in which that the market knows, and which that they see that from a general standpoint. Okay, hey, Tesla's down 30%. Now ask me, by the end of this year, will Tesla still be down by 30%?
No. But Mark, with that being said, like you said, there's a lot of negative sentiment in the market, and there's a lot of ignorance, and you got the Ford Electric coming. You got the Ford Electric truck coming. You got Rivian coming very soon. You got GM sponsored by LeBron, which I don't know why he did that, coming. So, they say the competition is coming, and then you got, what they say, Nikola coming.
I don't have my glasses, but I'll give this to them. Well, it takes me off. It doesn't allow me to show. It doesn't allow me to show like what my actual image is. Because if you saw my image of when I go off video, then you'll see it. But it's just like the cyborg. I'll give them the cyborg look.
With all this quote unquote competition coming, like, who do you honestly think will be a true competitor coming into 2022 for Tesla?
I definitely say be on the lookout for Rivian. Rivian is, that's a company in which that there's a lot. Like, here's the funny thing to know about companies in which that here's a secret to know, especially when they're coming from the private side. When you've got significant, like, respectable investors that are backing companies, like, we're talking about respectable names, like, hey, you even have Ford in there as an investor in Rivian, and Amazon in there as an investor, and Jeff Bezos on the side as an investor, along with some of your top Silicon Valley VC investors in there. Keep this in mind when we think about Lucid, which is also still quote unquote private. Lucid has been around 4 years after Tesla came into existence, and yet they're finally releasing a car. Take that into consideration. Tesla Motor started in 2003 or 2004. Lucid came in 2007, 2008. And yet now we're talking about Lucid. So where was all this talk about Lucid long before? Not a sound. When we talk about Ford, here's the thing about what the competition did to Ford, GM, and the rest of the auto manufacturers. Like, they sat in their apartments, or they sat in their offices with the blinds open, looking outside and seeing Tesla walk through and saying, like, does anybody want any? And everybody just kept peeking through the blinds. But then now all of a sudden, when they start seeing that, okay, hey, well, other folks are starting to flock to it, and we see that there's opportunity. Now we don't have to peek through the blinds. Tesla forced every single auto manufacturer that was using internal combustion engines to come outside and come play. And now it's like we're at a point now where every single auto manufacturer is going to have to prove that, one, that their engineering is better, and that the fact that they can build a better ecosystem around their vehicles. And I feel very, very bad for Ford, because Ford has made its bones through its dealerships network. Well, that takes away from some of your potential revenue. Same as GM. I look at Daimler in the same way. I look at BMW in that same light. They're struggling. Now, of course, they're going to release vehicles, but is there a strong enough ecosystem that surrounds it? And it's like, for me, it's like I see Rivian as a strong competitor. I see NIO as a strong competitor, because of the fact is, each of these companies focused on building an ecosystem, as well as, say, for example, focused on building dope engineering into their vehicles, and it shows. Now, there's going to be a ton of other players out there, and it's going to really show exactly, I think, that by 2022 or by 2023, you're going to see that, yeah, they'll come in and take in some market share, but yet at the same token, it's going to be like the iPhone versus everybody else. Is this the iPhone killer? Did we ever find out who was the iPhone killer?
Never happened.
Did anybody ever kill the iPhone? No. We saw a lot of Android makers go out of business, but yet at the same token, iPhone is still standing and it still sits supreme. Now, is its market share somewhat like subtracted? Yeah. But did they find better ways to increase those profit margins? Yeah. Is their phone sell better in profit margins than the rest? Yeah. Can Ford do that? I don't know. Can GM do that? I don't know. That's going to be something that we're going to be watching out for, that a lot of folks are building into the speculation and into the hype into these companies because of the fact that they're spending a lot of money towards advertisement. But sooner or later, your advertisement won't be able to, you can't spend, your marketing dollars can only go so far. Your product has to prove it. And we're dealing with generations now where it's like they're looking for the products and services to be proved on the actual playing field versus proved in commercials.
Right. Thanks for all that information, Mark.
Right. That was
Right, on the chat, Bombi Hislov asked if you're taking any mentees other than Jolene.
I mean, the beautiful thing is that, and this is something that I've had to adjust to. I went from individually mentoring, small amounts of people. And then I realized that I just couldn't do it. I couldn't do it if I was going to do the Come Up series. And doing the Come Up series, it allows me to give that mentorship to everybody. Like, a lot of things that a lot of folks don't realize is, even when I don't always have the opportunity to respond, many times what I will do is I will literally go through and read the comments and kind of build up a consensus, or read from the messages that are sent to me. And then that's a lot of times how is it that I'm able to bring forth information to the Come Up series and teach, thousands of people that are probably going to want to know the same information, and which that I can do that and be more value to the community. Because if not, then imagine me being an individual mentor to over 50,000 people.
Yeah.
right.
And the Come Up series has grown so much over the last, year and a half.
Mm-hmm.
And even now, I know, cousins are planning that actual physical cookout in Atlanta.
I know, right?
Question for you regarding the Come Up, when you started it versus, how it's, I guess, turned out right now. Is this what you expected it to be right now? And what do you see for the Come Up series over the next, let's say, 5 years?
So what I expected versus what actually happened. I tend to find that whenever you're doing something right, then ultimately your expectations only just shows you how limited or how small you were thinking in the first place. So
that's the gem inside of
So, from startup world, imagine when you plan things out very well in startup world, you typically set those out as year-end goals. And then next thing you know, it's like you always have to redo those year-end goals because you'll pretty much knock those out within 3 to 6 months if you're executing well.
Mm-hmm.
And so the same rules apply to us at the Come Up series. We treat the Come Up series as if it's a startup. And a lot of folks don't really understand. They don't really know that, from our production meetings to, how is it that we're always looking to optimize and make things better and more efficient, more entertaining, but yet at the same token, increasing the learning. We've optimized significantly from, the days in which I had my phone and doing that janky, video on Facebook Live, to then doing, full-fledged content where we're shooting with Netflix approved cameras. The amount of investment that we put in towards the content, in which that, honestly, we still make sure that it doesn't cost anybody anything, because of the fact that our overall purpose was to democratize the information and make it available and ready and understandable to everybody. And that's something in which that we succeeded. There are things in which that we definitely got to improve on, and that's like with anything. Like, for example, the flow of information, and also essentially making the information even more digestible. Like, I've toned back a little bit of the riddles, though that, I love riddles. um, but I realized that it sent people into a frenzy and also like giving people like anxiety attacks. So I kind of scaled back on that.
No, we
I
love
also
the.
realized, huh?
I said we love the riddles.
Well, thank
They,
you.
they weren't easy, but we love the riddles.
Like the Riddler said in the movie, if we kill him, he won't learn nothing. If I tell you, he won't learn anything. But here's what I see over the next set of years, and I think that we'll probably I just have this in my headspace where I believe that it's going to come a lot faster. But because a vast portion of how is it that I sunset from the Come Up series, where I step down and pass on the mantle to a few other folks, where I pass on the baton, is where we hit certain key performance indicators for the Come Up series. And when I look at that, it's like, I'm not the only significant, myself and Jolene, we're not the only significant content producers through the Come Up series channel, where the Come Up series channel like literally becomes, competition towards your CNBCs, your Bloombergs of the world. And yet we're more entertaining, but yet at the same token, we're just as educational. Where I see it is in the sense where, it produces even miniature series that go across different geographical areas, where we can start having the Come Up series in different languages, where essentially we also start hitting other markets, where we can get to a point where we can also have more live content, and then essentially even just maybe, moving it over to where we start doing even bigger cinematic projects that go on to teach kids, where it's like, you have your Saturday morning students. That's really where the Come Up series really starts to take shape, form, and fashion, but yet still always and forever free to the people, because of the fact that, it's all about the reason why, and the purpose behind that is it's about freeing the minds of the people, free their minds, and ultimately their wallets will also follow, and ultimately they can build from there. So that's our purpose, and that's our mission. That's our gift back. And ultimately, if it creates careers for other folks within the content creation space, because I believe that there's a lot more storytellers than just ourselves, we're for that. So, that's really where the 5-year trajectory goes, and also using that to literally start building curriculum, like what we did with this high school, which I'm excited for June 17th, where you will literally get to see what happens when the Come Up series infiltrates a public school system or a school system. And we were only just there for a month and a half. And what you'll see, what these high school kids will have pitched to you now, well, I guess I should start calling them college kids because they now graduated. But what you will see is that in just a month and a half, some kids from South Carolina, the best of the best, this is what they're able to discuss in just a month and a half. It's going to scare everybody. And the goal is that we want that to happen, because we want to put that on notice, in which that, this will be the building blocks framework, possibly, for us to literally, sorry if you hear the prancing in the background, that's butter. But we get to that part in framework where, the Come Up series maybe starts its own school.
Wow.
So not only just for kids, but we're talking about for people, like just people who want to learn to build something. And it's not just about investing in the stock market. It may even teach you how to start a startup and how to manage and run a startup. Those are all the types of things in which that we look up for the Come Up series, in which that, the future is very much so bright.
Yeah. It's powerful. It's very powerful, man. And I know we're all proud to call ourselves cousins. And we talked about, I know actually for myself, I'm a Come Up cousin before I'm anything else. So.
Yeah. I mean, we're all built into the mission.
Yeah.
We've all made gains from a significant trade that allowed us to open our eyes and see what's possible. I guess the difficult part is actually getting people to join on board and like to see that vision, because the Come Up series is amazing. And what we've created amongst ourselves is amazing.
Yeah.
So I guess, Mark, what would you say? And I'm sure you've heard this question before. Like, what would you say it not only allows people to get on board to understand like this is serious and we can really close this racial wealth gap, but not just about making money through options, but 70-30 through discipline and actually doing it for a real notion. What would you say would be, something that would help us as we spread that word?
I mean, you got to treat it in the same way in how you look at your portfolio. It's not going to come easy. It's not going to come quickly. It's going to come over time. When I think about some of the greatest wines that I've ever tasted, they were very well aged. When I think about the wealth in which that is ultimately built, that takes time. That was over time. And it was, you learn a lot in going through that process. So it's more so, and I kind of mentioned this on, I think this week's episode, when closing the racial wealth gap, it's not always about money. It's also about the mind. Be there as a source in which that people can look to. It's like one of the things that I hope that everybody gains from not only just us, but also from your channel as well, is we are the source of truth. If we can be that source of where they can always go to truth and, also be able to find it from people that look like them, and know that essentially that, our hearts, are just there just to see everybody else win. And that's the overall objective. And that's all that matters, and then, from that success of just eyes opening, will open up doors, many doors than you have ever expected. Like I'll give you a story. I'll give you an example. One of the cousins started just like y'all, another OG cousin, started off in this investment journey and this trading journey. And they work for, a company in the Midwest, or this, I guess, Southwest. And now they work on, like, after going through this process of the come up and just receiving the type of knowledge and opening up their minds there through the come up series, they now work underneath the CEO of their company. And the stuff that they're doing for the CEO of this company, and it's a pretty big company, what they're doing is now they're advising them based upon their competition, and they're using the same knowledge and skills that they gained from the come up series.
That's major.
Like, just think about that. Like, just think about like the world that it creates for every single one of you, in which that, you'll find, like, and when you're living out that purpose, I tend to find that not only your purpose finds you, your purpose will find you. And it's just more so in the sense that, are you mentally ready? Are you emotionally ready? And at the same token, are you ready to, like, literally accept the task at hand? So I think that, you guys are ready. We are ready. It's just a matter of just the time. It's like, we're not looking for anything microwave. We're looking for everything that's slow cooked and ultimately, oven only. Maybe even a slow cooker here and there. I mean, I've never known for anybody to say that, when they made jollof rice, I've never known for jollof rice to be tasting good made out of the microwave. I think that it was always made good over stovetop, if I'm correct. So, it's just that you got to think about it in that perspective, in the sense that it's going to take time. It's just going to take time. And though that we want as many hearts and as many minds to be a part of this process, it'll find us. It'll find us.
100%. I got to ask the question now that you've mentioned jollof rice. Nigerian or Ghanaian jollof?
Ooh, I've had both. I actually am gonna have to side with. I'm just kidding. I like them both. Though I lean more towards the spicy side, so that leads me more towards the Nigerian side.
Okay. All right.
I like, and especially if I have puffs there, then it's not a game.
We're not both Nigerian, so you're okay with us.
I knew it was a setup. Like I said, it's like I'm all for spice. I love spicy food. Spicy food. So for me, it's like, that's part that gets to me is the spices. Now, of course, it's like, they're both good. It's just a matter of, like, really at that point in time, I haven't really had significantly spicy Ghanaian food yet.
Yeah.
So, I mean, if somebody wants to send me a recipe, y'all know I can throw down in the kitchen. So it's not a game. Send me a recipe. You're only one recipe away from me getting hectic. So
No, it's no, definitely no, it's all jokes. And I actually tried Ghanaian jollof for the first time last week, and it was really good.
it's
Um,
good.
yeah, and I will say, like, when we started One Jollof, like the name came from play on jollof rice, and how people always jokingly debating like who makes the better jollof rice, and so what inspired the name was just the idea of kind of bringing everything together, all the
Yep.
countries and the diaspora together in one. So now it's all, we respect all jollof rice. Yeah,
It's,
so
it's just like saying whose gumbo is better, New Orleans or Mississippi.
100%, 100%. Mark, you got a hard stop at 10 minutes. I guess it's will be 2:20 at your time. But
Mhm.
Mr. Toby, if you got anything before?
Yeah. So Mark, you've done a lot in your lifetime. Trader, investor. Um, you're running a VC firm. So what is some of the
For 10 more days.
what's some of the toughest lessons you have to learn in each season of your life?
Ooh, so going through the collegiate side, it was just more so in the sense of understanding the focus of time. My grandfather always taught me that the four principles, time, value, cost, and worth. And it really, I understood cost, value, and worth, but time, it didn't really sit in for me until college. And then that's where it really putting everything into perspective for me, where when you have the knowledge and everything else, you're really walking through a world without time. Um, I guess my entrepreneurial days is really in the sense of, my love of solving problems. And what it taught me is that though that, your love for solving problems, you're not going to be able to solve it for everybody. But you do the best that you can and focus on the things in which that you can have a strong impact on today versus focusing on the things that you can't control and having little impact. And then on top of that, like, it also taught me the mind of thinking about others first before, yourself. Most startups like to think about the revenue and everything else that could potentially come through. Really being a startup and an entrepreneur really helped really shape my mind in thinking about what's in the best interest of the consumer. What are their needs? What are the social impacts in which that this project can play? Which led me into being an investor and realizing that, if you can't invest in things in which that, that look like you, or the people that look like you, or that are things in which that are for the people, then ultimately what's the purpose? Honestly, it's like, it really taught me how to, being a VC taught me a few things. One, it let me know exactly how broken such a system is. It let me know exactly how much lack of diversity and how much lack of innovation of ideas that we actually have. And it also let me know exactly how small the world is, in which that you see innovation in some of the smallest places. I would say that honestly, if anything to pass on to anybody from my VC days is, really, a lot of times when people come to, pitch me as a VC, they're very much so optimistic about their product. But then when it comes time talking about, like, what will your product change? What will your product have a significant impact on? Or what will your service have a significant impact on? Many times that answer doesn't really get answered as fast. And so if we think more so on the things in which that we can, not even more so change, but improve around us, that's the greatest investment in their spot opportunity. Because of the fact that invisible hand says, though, that, you're selfishly going to do it because you want to do it for your own wealth. But at the same token, society does have a strong benefit there in the invisible hand. When it comes to the Come Up series, which is still just in its very infancy stage, really looking at it from the standpoint of, there's so many minds out there that, that you want to free, but also realizing that, not everybody's ready for the bright lights of freedom yet. And those lights of freedom shine very, very bright, but without any type of guidance of exactly how to navigate to freedom, then, It's pretty much like the Plato's allegory of the cave. Once they see the bright light, the bright light becomes more of a prison than the darkness does. So it's just more so, and that's why I said little by little, time over time, we're going to get out of that cave, and people, their eyes will be ready to see the world, and which that is more freer, and that is also way more open and available, and opportunities in which that flourish, and that you can also capitalize on, and the impacts in which that you can have. So those are just some of the small things in which that I learned. And I also realized that sometimes many times I'm thinking well out here. Yeah. And many times it's like I got to realize that sometimes I just got to dial it back in because of the fact of how my life has been shaped. I'm very much so futuristic thinking and very much so out there. And many times it's like the biggest lesson that I'm learning now is to sometimes dial it back to help folks realize that, what you're going through is just a season, but it's just a moment in time in which that, when looking back in that moment of time, it's like having an argument with someone, 3 months later after having the argument, after it's like, dust is settled, you will not probably remember what you were arguing about in the first place. So did it really matter?
That's true. Mark, where can people learn more about the Come Up series and get tuned into, the lives on Tuesday and Thursday?
Listening to y'all. Watching y'all do y'all thing. I'm just kidding. But for real, like, if you're a Come Up cousin, if you're watching this channel, then definitely, subscribe to this and like this channel. And definitely tap in. You got some fine brothers there, and I may have to also bring you guys onto the Come Up series stage if you guys would like to. I would be honored to have you guys there and talk about also your journey, what you guys are doing. You can find us on IG at that Come Up series. You can find us on YouTube at the Come Up series. We're trying to work on getting the Come Up series handle from another previous owner of a YouTuber, but they haven't responded back to us. So we're working on that to get on Twitter. But yeah, you can find me on Twitter or Instagram at I am Mark Monroe, or you can write me on LinkedIn.
Mark, it's been an honor to have you here.
Insurmountable wealth of knowledge.
Well, I mean, just let me know. It's like I'm always willing, to provide, any type of knowledge and be of resource if I can. So, I love what you guys got going on. I've had the opportunity to watch a few previous episodes before I came on, and it's pretty dope. So, let me know. Who knows? It may even be a thing in which that the communities branch together, and ultimately it becomes, the Come Up series.
I got it.
Yeah. Jollof edition.
Oh man,
we definitely hope to see you physically in Atlanta, in 2022.
I'll be there. Sure. I'll be there.
And for
I'll be there. And I hear I'm supposed to be giving some type of keynote.
Okay. for we're going into this next quadruple witcher period. So for do you have any words for, I guess, cousins out there and people who, are looking to get into this? Maybe we can close this out with some words around that.
Sure. So really, like, you're already starting to see quadruple witching really start to take place now. And how you can look at it is look for the signals and block out the noise. The noise will be all the chatter that's taking place around. The signals will be essentially what you can actually validate and verify with the data. So for example, we're seeing volumes start to increase as it pertains to things rotating. That's happening now. You're starting to see that, also that certain things are starting to pick up steam now that we're in the second half of the year. So people are starting to position themselves before the last day. Quadruple witching is really just that Friday. I think it's June 18th or something like that. But you're going to start seeing, a little bit of volume on that day as it goes towards the close, where you start to see different asset classes expire. But now we're heading into the summer, as well as, technically we're already technically in the summer, but now we're in the summer going into preparation for the fall and for the things in which that are coming forth next year. A lot of 2021's, narrative, early 2021's narrative is coming to its end. And now it's like getting to a place where it's like, okay, hey, now we have to get back and start positioning for next year. Now, when you make it to the mid-year, we're now looking at the next 6 months to the 12 months and finding out, okay, hey, well, where does the market go from here? Where does the economy go from here? And if we're getting out of this temporary inflation period and moving more so into now we're going to start seeing some growth, we're going to start seeing the Fed taper off, then some of those areas in which that were once upon a time loved from the Fed releasing a lot of these debts, especially corporate debts, off of its balance sheet, then some of those companies or sectors don't look as attractive anymore. And now they're going to start looking at, okay, hey, well, where is it that I know that where they can get money and ultimately show less amounts of debt, but also show cash in significance? That's where it starts to focus towards different sectors, and this game gets a little bit more strategic going into the second half of the year for positioning. So now start asking yourself, who do you expect to be winners going into the second half of the year? Also going into, moving forward over the next set of years. It's not anybody's game. If anybody's telling you that it's anybody's game, then they're lying to you. It's a certain set of sectors in which that it's going to be their game for quite some time, and they may be taking a break now. But we know what the TikTok is. If you ever get the chance, just go and look at the Industrial Revolution, and that can be a very clear sign to let you know exactly where things are starting to shape up, where the money is starting to really focus towards. Look at where don't just look at the investment dollars of where the stock is. Look at the investment dollars from where the research, the R&D, the actual investment into consumer areas. Look at where they're spending their money. And look at the areas in which that the people in which aren't spending money, look at what's happening to them. It's a very clear and glaring sign that's going to start picking up. But as we look towards this quadruple witching, and if you're looking at it as an entry, you got to look at it in the sense of where is the potential, and not in the sense of who's just a winner today, but who do I expect to be a winner from over the next 2-3 years from now, and play accordingly. Because that's really where everybody's starting to position themselves. 2022 is going to be kind of like, all right, back to business. 2021, the end of 2021 is going to be more so the fact of it's time for us to start positioning and getting a little bit more serious. And then 2023 is going to be who's who and who's not.
And Mark, it's been a pleasure to have you.
Oh, I forgot to say also 2024, you're going to see who got dusted.
See what happens next.
Everyone, thank you for tuning in. Please go follow the Come Up series across social media. Thank you for tuning in to Pepper Soup Talk. We're here bi-weekly on Saturdays at 4 p.m. Eastern time. You can follow us at One Jollof social media. Mark, again, it's been a pleasure to have you, and thank you for your time. And we'll see you on the live.
Yeah, you guys may be on the live soon. So
let's do it.
All right, that's a confirmation right there. I'm here for it.
Yeah, 100%.
All right, y'all. Thank you for having me.
Have a good rest of your day.
Peace.
Okay.